guys, today I have a trade breakdown for you guys today. This time I'm going to be showing you guys a play that I did on May the 7th. So this play was on Twitter, and we banked off of it pretty well. Depending on where you got in on the 7th, some people was up over 100% on their investment on Twitter. So looking at Twitter here, you see I have my lines of support and resistance. I'll go over those here and why I chose these. So we start up here. So a line of resistance is just places where the stock has had trouble going above. So you can see here, Twitter had trouble going above 34.42 quite a few times. I'm going to zoom in here. Quite a few times it could not get above 34.42. So that's why I chose my resistance there. Also, another area of interest at 27.32, which is a resistance slash support on a longer term chart. But when you see a resistance or a support on a longer term chart, it still holds. So you see here, 27.32 is still a resistance right here on this 4-hour chart, as well as a longer term chart such as a weekly chart. So you see resistance here. Been a few times that they was teetering around this line, we couldn't get above before finally getting above and turning this resistance into a support. So this area here is what I want to focus on today. So this run up on Twitter occurred right before their earnings, and after their earnings they came down. But when they came down, you can see that Twitter was stuck in a range. So by range, I mean it's just some areas where Twitter was just going up and down to the top of the range, back to the bottom, to the top, to the bottom. So I'm gonna take this out, this gray part here, so you guys can see a little better. Okay, so I got into calls on Twitter on this day right here. Now the reasoning that I for getting into these calls once again is because I seen the range that it was trying to break out of. We take a look here. Twitter was in a range from about, I'm gonna go ahead and put the box back now that you guys can see. You can see this range that Twitter was in. Alright, so they was in this small range for 1, 2, 3, 4, 5. Alright, so about 5 days Twitter was in a range from 27.29 up to right at 28.89. So for 5 days they could not get above or below this. So what led me to really get into Twitter calls on this day was because, as you can see here, if I zoom in, I'm going to take this off once again. You see here, if I'm looking at this 4-hour chart, you see buying pressure both of these days as it was coming up to the top of the range. Now you see the long wicks at the bottom. When you see long wicks at the bottom, that means that the sellers have been trying to push the price down, but they could not. So if I take a look at the hour chart, which every candle represents 1 hour, you can see it even better that Twitter, had lots of buying pressure on this day. Look at the long wicks at the bottom of almost every single candle. You take a look at volume here. Look at the amount of buyers compared to the amount of sellers. And look at the previous day. A lot more sellers. You see the buyers really stepped in on the 7th. So we got in, I got in around here. I seen all this buying pressure. And the next day, Twitter had ran up. Now I was hoping to get Twitter up to 30.43, which was my next resistance. Because you can see here, had a little trouble getting above a few times here. But it got close enough. Went ahead and took profit. Sometimes it doesn't always play out this perfectly. Sometimes It takes a little longer for swing trades to work out, but this was a trade where, execution just really paid off. Sometimes it pays just to execute. Sometimes the market rewards you. Sometimes it doesn't. When you get into a trade, trading is not about being right or wrong. It's about probability, because just as easily as I was in calls for Twitter, there was someone else in puts. So, Twitter could have tanked, but I knew that the probability was in my favor, because you see the support down here at 27.32 could not go below 27.32 for multiple days, and it was finally trying to push up out of the range it was in, and it finally did. So you see now the RSI is a bit high, but Twitter could possibly keep running. I actually took profit on this the next day. This was 100% play right here. Off this small little movement. And the reason that I was able to make so much of this small movement trading options is because the implied volatility on Twitter got pretty low. So implied volatility raises when a stock goes up and down significantly every day. And you can see for the past, 5-6 days, Twitter has been stagnant for the most part. So the contracts were very underpriced. So it didn't take a lot of movement for me to make 100% with a good contract. So let me show you guys the risk reward in this play. Okay. So if I would have been looking at Twitter, let's say you're looking at it since this area right here, right before we got in, around here, the risk would have been, I would have gotten out of Twitter if it would have came back down and broke support. So I'm going to draw this red area right here. This would pretty much be the risk. This is where I would get out. All right. Okay, so here's the risk, but here's the reward. So the reward is all the way up from the break of the range. I say about 29, all the way up to possibly all the way up to 35.5, which was at the high point. But everything in trading is not going to be perfect. You're not going to have perfect exits and perfect entries. So this is the possible reward up here. Risk reward is very important in trading. You always want to have more reward than risk. So you can see here, getting in at about 28 and would have gotten out, under 27.19. That is about a $1 reward, $1 risk compared to, all the way up to 35, almost a $6 or $7 reward. So, like a 1-to-6 ratio, just about, which is a great ratio. So it's all about finding high probability trades. You're not gonna always be right, but as long as you can make the probability, go in your favor, that's what it's all about. Because like I said, this trade could have easily went the wrong way, and there's just nothing that I could have done about it. Sometimes that happens in trading, but you have to keep executing. You gain confidence. So this was a trade breakdown on Twitter. If you would like to see more videos like this in the future, please like, leave a comment, and subscribe.